Here's the good news about Macy's earnings. It has no impact whatsoever on the Thanksgiving Day parade. Investor Beat starts now. Thanks for watching. I'm Chris Hill. After 6 consecutive quarters of economic contraction, the Eurozone, yes, really, the Eurozone, reported a rise in GDP of 0.3%. It's not much, but we will take it. Joining me in studio today, Isaac, Pino, and Charlie Travers. Guys, our top story. Macy's second quarter profits were lower than expected, and they cut guidance for the rest of the year. One analyst previewed the quarter by saying Macy's had been doing very well lately, and results would indicate if they could keep up momentum. You were that analyst.
I was that analyst.
On yesterday's show. What'd you make of the quarter?
I was actually disappointed because they have been doing so well. Comps were down 0.8%, which is not horrible in the grand scheme of things, but it is lighter than their guidance for the full year, which is 2.5% to 4% on comp store sales growth. They did tick their EPS guidance for the year down a little bit. I don't think this is a crisis mode situation as if you're Sears or JCPenney, but they're also not doing as well as some of the other big name retailers in this space. I think what we have to look for going into the fall is if they can get their momentum back.
That being said, you look at the ripple effect today in the retail industry, and there were people saying, wait a minute, if Macy's is struggling, what does that mean for Kohl's, Targets, etc.? Is that a fair assessment?
Yeah, I mean, Macy's targets, middle to upper income shoppers. These are shoppers that are doing quite well right now, but they blamed it on the fact that people are going out to buy cars, they're going out to buy homes, and they're buying household improvement items, and they're not shopping at Macy's. The question there is, they're not going to department stores is what Macy's phrased it as, and maybe just they're not going to department stores in general, and they're going to other retail outlets, and that's the concern broadly for the rest of the retail industry is maybe department stores, it's not really a growth industry, it's almost a market share, if you can capture market share from your competitors, so, you have to differentiate yourself, and I don't know if Macy's is quite doing that. It's had a good performance, and people might disagree, but at this point, it's not so great that they're having lower comps for the first time since 2009.
They have been doing well lately. The stock reflects that. It is beating the market year to date, even with the slight pullback today. What do you think of the stock?
It's actually fairly interesting. It's not an expensive stock. It's at 11 times earnings, and if you think that they are going to be here to stay, it could be a good buying price. But if you think they're the next JCP, you're going to be a little worried.
All right, let's get to some of the day's movers and shakers. Deere reported record profits in the third quarter, but said investors should not expect a repeat performance in the fourth quarter. This is a strong brand, but they are having a bad year.
It's a phenomenal brand. I mean, it's been around for 150 years, and it already has a market presence in international economies, a lot of the growth markets that they're looking at. I don't look at it as really a stumbling block quarter. They're still growing strong. They estimated 20% growth in South America. They've invested heavily in Brazil. A lot of opportunity there with soybeans, corn, wheat. And, this company has opportunity for growth over the next couple of decades. You see a lot of these up-and-coming economies that haven't consolidated farms, and they don't have the need for heavy-duty tractors yet. But you imagine that's going to change over time. John Deere is a great brand, and I feel like long-term stock's relatively cheap right now.
Apple continues to rise one day after activist investor Carl Icahn revealed he has a large stake in the tech giant. Icahn is pushing CEO Tim Cook to increase Apple's share buyback program. Good idea?
Yes, in theory, but it's not the long-term fix for anything. When you see somebody like Carl Icahn come in, or David Einhorn previously with Apple, and say Apple needs to do something with their cash, it's like a little espresso caffeine jolt. Nice for a day or two, and then it's short-lived and goes away. I think if you are a long-term investor in Apple, you're looking forward to the next products they're going to announce.
Mannkind up big as the biotech firm reported its drug to treat diabetes got a passing grade on phase 3 trials. So not final approval, but good news if you're a shareholder.
Great news, and it's been great news all year for Mannkind. Even though they have one major product in the pipeline, the stock's up like 250% almost, and it's really, Mannkind believes they can make a better mousetrap at the end of the day, and the whole idea of having an inhaler for an insulin delivery as opposed to injected needles makes sense, but in the past, people haven't really made it that convenient to use at a restaurant per se. Now, this Dreamboat device could be the big game changer that disrupts that, but you still have to wait and see if the FDA approves it, and so the device is just one step closer to getting there.
And finally, 3D printing company ExOne getting hit on disappointing second quarter results. ExOne also lowered guidance for the full year. That's kind of the double whammy out there. I mean, when you look at the 3D printing space, it seems like there are better options despite the run of this stock recently.
I mean, this has been really the sexy industry of the year so far, and ExOne stock had tripled year to date. And so even though they doubled their revenue in the quarter, that wasn't enough, which shows you how high the expectations were. When they said sales are going to come in soft the rest of the year, I think people got spooked out.
All right, that's going to do it for Wednesday's action. What do you got on your radar?
So I'm going to be watching Walmart. We're talking retail. A lot of the different retailers are coming out to report. And if you're seeing some modest results from a retailer that focuses on middle to upper income consumers, I want to see if Walmart can deliver when they focus on the lower end of the market. And operating margins is really the thing to watch with them to see if those are continuing to be robust, even though they have competitive threats with Costco, Amazon, the list goes on and on. So Walmart will be reporting tomorrow. I'll be looking at operating margins.
All right, Charlie, what about you?
Also reporting in the retail space is Nordstrom, which is on the complete opposite end of the spectrum. We've seen a lot of the luxury brands do well this year. As a higher end retailer, Nordstrom had very strong Q1 sales. We'll see if they do well again this summer.
All right, for Isaac Pino and Charlie Travers, I'm Chris Hill. Thanks for watching. We'll see you tomorrow.
People on the show may have interest in the stocks they talk about, and the Motley Fool may have formal